Hello, Maverick Traders. Welcome to the trade room for July 10th through July 14th. This is Darren. I'm joined by Corey. Let's go ahead and get started.
Do you want to be a professional trader? Maverick Currencies is the oldest US-based Forex and crypto prop trading company that will pay you for trading with our capital. Trade our capital and keep 70 to 80% of the profits. We are looking for traders just like you that are hardworking and motivated. Click the apply link on the top right of this video to see if you have what it takes. That link takes you to a 4-minute video that explains the trader position available, and you read a list of FAQs that answer pretty much all the basic questions you have at this point. After watching the video and reading the FAQs, if you're interested, fill out an application, then you'll watch the full-length recruiting video, and then schedule an interview with one of our traders. Are you our next trader?
All right, so let's check out last week's news. So the markets are kind of taking a pause right now. We're hovering near recent highs. Small caps have kind of been underperformed. We're going to see that in the analysis right there. The 10-year bond is now past 4%, which that was kind of a line in the sand for a lot of people. The forecast is for one or two more 25 basis point hikes for the rest of the year, and I definitely think that that's going to be coming. We're into the second half of the year. I even think that there's a possibility of a third hike, probably about a 20% chance of that one. But definitely I see the next two hikes coming right there. This was really a weird week because we had a half day on Monday. We're closed on Tuesday. So really we only had 3 full-time trading days. Wednesday, Thursday, and Friday is what we had. So very, very shortened week for anything to happen. And not a lot really did. Unemployment claims, came in pretty much in line. Services PMI was slightly hot. The JOLTS job openings, just a little bit light. So we've got a lot of it. We're getting close. The economists are getting closer to figuring out what is going on. But we're getting some positive news, some negative news. So everything is kind of up in flux as far as the news of the economy goes. And you can really see that reflected in the stock market prices. We're going to see it here in a little bit. We're in the summertime. We're in the doldrums. A lot of people are going on vacation. But a lot of people are just trying to figure out what's going on. It's not a buy market. It's not a sell market. This is just kind of a hold market. Let's see what's going on. So let's take a look at the markets right now. Dow was down 1.8%. S&P was down 1%. NASDAQ was down just about 1%. Russell was down about 1 1/3. Oil was up 4, which was a little bit surprising right there. And gold just, was kind of negative. So let's take a look at the spiders. You can see we're just kind of in this high base pattern right here. We're pulling back. Friday was a little bit, it wasn't an ugly candle, but we had a long upper shadow right there. Couldn't get any type of momentum going right there. We're basically pulled back to the 20-period moving average. This is still a bull market. It's just we're in the space. I mean, I would expect us to go down. Maybe if we hit the 430 level, I think that would be good. We're just kind of going to be in this channel for a little bit. I just don't see any impetus for us to be pushing higher right here. Same thing in the NASDAQ, a little bit narrower bit of a channel right there. Kind of just this high base, pull back to the 20, and we go down to the 360 level, and we're still in this high base channel right there. It's where people are just comfortable. Like I said, it's not bullish, it's not bearish, it's just kind of a hold market. No real news, on the VIX right now. We did spike a little bit higher this week. Thursday, especially, you can see it right there, long upper shadow. There was some little bit of jitters in the markets on Thursday. That came right back down on Friday. I mean, we're still in this channel between 15 and 16 in the VIX, which is still pretty low. Not as low as what it was 2 weeks ago, but still, people are fairly complacent about where the market's going to go. So our market outlook, we're likely to hold these levels until second quarter earnings begin. Okay, higher bond yields is the risk, though. Further increase above 4.2 in the 10-year could cause a bit of selling or just a lack of buying right now. I mean, that's where we're looking at right now. Inflation data is going to be important. We've got the CPI coming out this week, and the PPI is also coming out as well. And again, we're going to get that 10-year bond auction on Wednesday, so we're going to see where the rates are going to go on that. So that's, I'm not even worried about consumer sentiment. It's just really the whole story here is inflation. Corey, do you have anything else to add on the analysis from the market?
Yeah, the inflation is pretty interesting. If you look at the inflation numbers here, the month over month number is expected to come in at 0.1%. What's interesting about that is it just, as far as the year over year number is concerned, it's just adding the prior 12 months. And you add all those up, and that gives you your annual CPI. Well, the reason that this month is really interesting is July of last year is what we're going to lose. And July of last year, we had a plus 1.3% increase in month over month CPI. So we're going to get rid of a huge inflation number, and we're going to add a new number, which is expected to come in at 0.1. So if that's the case, if inflation ticked up 0.1 and we lose last July's number, then the year over year number is going to be reduced by over 1%. So we're going to see this drop potentially into the twos, 2.8, 2.9, something like that, depending on where that comes in. Now, this was already known. This is one of those known knowns in that we know that there's going to be a huge drop in inflation. June and July of this year are where the big drops occur. It was sort of my thesis that that would be the good news that was sort of the market top type of idea, that usually you rally in anticipation of that good news. And then when the actual good news is released and the public, which should have known ahead of time, but they usually figure things out late, right? And they go piling in. Oh, wow, inflation's all the way down here. It shouldn't come as a surprise to anyone if you're paying attention to the data that that's going to come in with a huge drop this week. But I sort of suspect that the markets could rally on that. Again, just the general public going, wow, we've beat inflation, hip, hip, hooray, and they rush out to buy stocks, and that's a little bit of the exhaustion high. The June number did not mark the top, and I'm surprised that the markets have been as strong. Well, they've gone sideways the last few weeks, but I'm still just pretty surprised that they've been even able to consolidate up near those highs as well as they have. But perhaps that CPI news coming in good could still act as a little bit of an exhaustion type of dynamic. I thought it would be closer to June. It's stretched out here to July, but that's kind of an interesting piece of information. So watch for that yearly CPI to take a big drop. The market outlook, you guys have done a good job of remaining bullish and staying on this bullish train. I would have expected a little bit more give back from this exhaustion high. Exhaustions are an area where the market's tired. And the S&P and the NASDAQ and so forth, they were tired from this big rally. But one way to work off an exhaustion is to correct down in price. Another way to work off an exhaustion would be to correct sideways in price. And you have to give the markets credit. They have, at least to this point, been able to work off this exhaustion sideways, so that's pretty impressive there. Back to you for the sector analysis.
Yeah, that's a good point there, Corey. And we were talking about that before. Are we going to get that pullback, or are we going to go sideways? Yeah, apparently it's just pulling out to be sideways right here. Like I said, it's not a buy market, it's not a sell market. It's more of a hold market right there, even though technically we're at a +3. You can see the markets really didn't do a heck of a lot. The sectors didn't do a heck of a lot. Taking a look at where we went, utilities basically flat. Communication services flat. Your real estate was the only one that had an up week. It was only up 0.25%. Healthcare took the biggest hit, down almost 3%. Followed by materials down almost 2%. So let's take a look at the sectors individually here. You can see utilities. I've been out of this for a couple weeks. I was traveling. Right now, I'd say -1. There's nothing really special about this. Just looks like we want to go down. If we do go down, we're not going to go down that far. So just mildly bearish action on utilities. Communication services. We've been going sideways the past week. Was at a +3 a couple of weeks ago. I'm at a +2 right now. I'm just not giving anything a +3 this week because I do think that we're going to go sideways. But you can see we're in a very nice high base pattern right here. We did break through on, it looks like Wednesday, that previous exhaustion high. We pulled right back. So this, I think, while it's bullish, it's still going to be sideways at a +2 on communication services. Real estate's looking pretty good. Now, you would look at this and say, well, clearly a +3. We broke through, the previous June highs, but we're pulling back. We're pulling back fairly decently. It's very orderly right here. You can see on Thursday we touched the 20-period moving average, but then we rebounded right off that like a trampoline. I'm going to be at +2, but I do see some potential for this to continue to be a bull pullback in real estate. But still, technically, we're at a +2. Over to industrials, kind of the same situation right here. I'm at a +2 on industrials. It still looks good. I just want to see where this pullback ends, and when it bounces, I'm happy to go back to a +3. But we could really, honestly, continue to go sideways right here. Pull back to that 20-period moving average and just hang out. Healthcare is looking like utilities are, just mildly -1. I mean, if you asked me on this last week, I'd have been at a 0, a +1. But it really lost. You can see Thursday and Friday were kind of ugly days for the entire healthcare sector. We're kind of at support right here. So let's see if support holds. And if it does, then I think we get back into that range and just continue to go sideways. If it falls out, though, I think we've got another 3% move to the downside in healthcare. So let's just wait and see where that goes. But mildly bearish -1 on healthcare. Financials is another one you can see, pull back to the 20-period moving average on Thursday, regained a little bit on Friday. Still got long lower shadows, long upper shadows. We're in still a bull pullback right here. I think this goes into a range itself. You've got to be a +2 technically on this, but I think really what we're looking at is more sideways action in financials. Same thing in consumer. This one looks a little bit better, but it's still, we can't get any upward momentum. Thursday was a pretty ugly. It had a pretty big gap down, just hung out there. This one looks like the previous resistance has now become support. So this is a little stronger than a lot of other things. But on consumer, at a +2. But I think this is going to be one of those +2s where, again, we go sideways and we just hang out here till the 20-period can move up. The 50-period can move up as well. I mean, take a look at how far away from that 50-period moving average we are. And you can see, I mean, there's a lot of time that needs to go, that we need for the 50-period moving average to catch up to the price action. But still, a +2 on consumer right here. Similar story in tech. We've pulled back to the 20-period moving average. Let's see if we can hold it. I think we probably do. I think we go back in there and go sideways again, +2 in tech. A little less bullish in materials right here. I'm at a +1 on materials. On Thursday I would have been at a 0. Friday we regained a lot and we were up almost over 0.75% on Friday. But you can see that long upper shadow couldn't get any traction. So I think we've got some more move to the upside right here in materials, just not a whole lot. Mildly bullish at a +1. And for energy, I'm just going to say 0. We're stuck right in the middle of a range between about 77 and 82. Maybe a little bit to the upside, but this just tells me energy is going sideways. Even though oil had a pretty big week, you can see it really wasn't reflected in the energy producers, in the energy ETF. So I'm going to 0 on energy. So put everything in perspective here. -1, utilities and healthcare. 0 on energy. Mildly bullish at a +1 in materials. Consumer, financials, industrials, real estate, comm service, and tech. It's 6 sectors there that were moderately bullish at a +2. But again, like we've been saying, I think this is more of a sideways market. I'm not going to get super bullish. I'm not going to go +3 on anything until the market reasserts itself. So let's play these things sideways to bullish, and let's see how things play out here for the next month. Let's take a look at some possible trades. So last week we were sideways to short in PPL, and you can see this one performed as we expected. It was down 0.94%, so down almost 1% right there. That's exactly what we wanted to see from it. This trade's got a little bit more to go. I'm happy with it where it is. So this one turned out really nice. We're looking at right now is SLG. That's SL Green Realty, sideways to bullish on here. So what's the best way to play this? I can't believe to say it. It just doesn't feel like it's there right now. But I think you have to go out to August. Give yourself a good 6 weeks. Go long those 2750s, and then short the the monthly July 30s against it. So this one only has monthlies. It looks like. That's the way I think I would play it. The other way you could go out there is a little more conservative. It just play the August 30, 32.50 bull call spread. In communication services, last week we're long on Google. Google just kind of went nowhere. So we got a little bit more time in this. It's in a base right now. Let's let it play out a little bit more. What we're looking at right now is Comcast, the A shares. Nice ascending triangle right there. We bounced off that 20-period moving average on Friday right here. So what do you want to do? Go out to August 4th. This one's got weeklies. Short those July 14th 42s against it. So you get a 40-42 diagonal call spread. I think this is the way to play it. In healthcare, last week we were sideways to short on Agilent. Symbol for that is A. That was down 2.7%. So I'm happy with the way that went. All right, this week we're looking at Amgen. Nice little bear rally, kind of confirmed on Thursday. Further confirmation on Friday. You still get time to go into this one. What I think the best way to play this one, just go out to July, the monthlies, and do the 215, 220 bear call spread. It's going to have a lot of delta in it, not a whole lot of theta, but you can see supports right there at 215. You're giving yourself a good 2 weeks for this trade to pull out, and I think that's good. I mean, you're asking to move $4 to the downside in 2 weeks. For Amgen to do this, you can see it's in a downtrend. I think that's the way to play it. Corey, you want to take us through a few?
All right, so the industrial sector. Last week we had CPRT on the long side. Stock was slightly lower, but you can see it's kind of a bull pullback pattern. Old resistance areas acting as new support, so still possibility that bounces to the upside. This week, new trade idea could be in GE, General Electric. Again, a bull pullback, very similar to the prior chart. We have pulled back to the prior highs, could act as the support to spring this higher. You could do it a couple of ways. On a shorter term trade, you could even go with the July 21st, 107, 110 bull call spread. Expectation being that it goes back up towards those highs and even above those highs, or maybe some sort of diagonal call spread if you wanted to stick with the trade a little bit longer. But GE looks bullish, certainly acting well in this market environment. On the financials, here we have Berkshire Hathaway. Now, Berkshire really went flat, and we had it on the long side. You can see that on Friday kind of gave up the gains, and this one needs to be watched a little bit just to make sure that this doesn't end up as kind of a false breakout, because it was really wedging up here and tried to break out on Friday. If on Monday you just recover, bullish candle right up through, no harm done. If this reverses and comes down on Monday and reverses off of those highs, then I think you probably have to look to exit the position. From false moves come fast moves sometimes, and this is a little bit of a false breakout. It's only 1 day. It hasn't really confirmed that, but something to watch there. New trade idea would be Bank of America, sideways type of positioning. We were looking at just a couple of ideas you could play for this little gap fill here at 29 through next week, 28, 29, 30 butterfly. It would be a good risk to reward, kind of a lower probability trade just because it's a tighter window, but something along those lines where 29 is your target and you could go with either of the next 2 weeks. Next, we have consumer stocks. So on the consumer side, last week we had Amazon long. It was up about 0.5%, but still ultimately in its consolidation. Still looks bullish, still acting bullish. As a new trade idea, BJ's Wholesale. This one is in a little bit of a bear rally, quite possibly at the top end of its recent range. So as we look at the price action at the top end of the range, may move back towards the lower end of the range. You could go out to August, do a 60-65 bear call spread, and target a move back towards those lows. We think that makes sense given its bearish price action in an otherwise bullish market environment. We would expect underperformance. Next, we have technology. Last week, we had First Solar on the short side. That was down about 0.5%, and the downtrend is still intact. As a new trade, OKTA. This is a software company. Bear call spread. You could target a 67.70 type of bear call spread. Expectations, again, back towards the lows, quite possibly make a new low in that stock. Next, we have materials, and materials, we had LTHM on the long side. That was flat for the week, but as so many others, even when it's flat, this one's still holding in that upward trend. As a new trade idea, we've got Freeport, 36.39.42. Butterfly, this would be targeting a move right up towards this range. 39 right here, right up towards this range of 42, 36, and 39. So that would be the body of the butterfly. Your risk graph would obviously peak right up at that area. And we think that sort of sideways market idea would make sense in Freeport. Last but not least, we've got energy. Last week we had PSX, and PSX we had on the short to sideways. This one was up quite a lot, up 4% on the week. This one has certainly changed its chart, changed its trend. You might be looking for an exit, something along those lines. EOG could be a sideways trade idea. July 105, 110, 115. Expecting it to come back towards 110 and not really trusting that it's outside of its range. So we would play it to remain sideways going forward. So those are our new trade ideas. And Darren, back to you.
Would having more trading capital help you meet your trading goals? Maverick Currencies is the oldest US-based Forex and crypto prop firm. We fund traders just like you with 5- and 6-figure accounts where you keep 70 to 80% of profits. Click the apply link on the top right of this video to start the process. This will take you to a 4-minute video that explains the trader position, and you can read a list of FAQs that answer pretty much all the basic questions you have. After that, if you're interested, fill out an application, and then you'll watch the full-length recruiting video and schedule an interview with our recruiters. Are you our next trader?
All right, so let's wrap this up here. We have bullish market conditions. Now, that does not mean we're going to go off to the races right now. We really think that we're going to get some consolidation, but you still have to be on the bullish side of this. Okay, watch for rates on the 10 years, and because that's going to really impact the high-tech sectors right there. They're much more leveraged than your traditional manufacturing, utilities, things like that. So you've got to look out for high rates right there. If the broad markets aren't giving you a good picture, go ahead and focus in on the sectors. I mean, you should be doing that anyway, but look for the strongest performing sectors versus the weakest performing sectors, and that's going to show you where to be bullish, where to be bearish right there. And sometimes you have to just go sector by sector and not pay attention to the broad markets per se, and just look at okay, where's the money flowing into, where's it flowing out of, and let me put a bunch of different boats in the water. Whether they go upstream or downstream, we really don't care. Just get get out there and make sure you're playing strength and weakness. As always, don't handicap any of your trades. Go position sizing. Go out to your trading plan and say, if your trading plan says I'm going to risk 2% on each position, go ahead and do that. Don't start playing favorites and say, well, this one looks really awesome. I'm going to risk 4% of this one. I'm going to risk 1% of this one. I'm going to risk 3% of this one. I'm going to risk 2% of that one. Be consistent, because you never really know where things are going. Sometimes that's the only thing you can do, is just manage your risk. As always, thanks for coming here. Corey, appreciate your time as well. Good trading, everyone.